Hello and welcome to this week's edition of the Crypto Chronicle Podcast. I'm Mitchell. We're here with Head of Sales Taylor.
How are we today, mate?
I'm okay. It's been a bit of a bloody week, as noticed. We've got the sign as red. I think maybe last week was red too, maybe even the week before. So
kind of been that way. It's red chop is probably the best.
It's red chop on Bitcoin. It's been a bit more nice on altcoins if you're an altcoin investor. We've seen pretty much on this pullback from, you'd say when price probably was consolidating at that 64K range for a bit, that once it then did dip on the back of a fair bit of bearish sentiment, which we'll talk on soon, the alts didn't really move, did they?
Not a huge amount, depending on obviously what alt. There's a few that definitely moved quite a bit and some that didn't do anything.
I think the theme kind of what did pull back most was probably what ran up the hardest.
Yeah, correct.
So you saw things like pretty much all the meme coins. So WIF in particular, I think like a week or two ago, WIF had re-rallied to as high as $4. I think you were able to buy WIF honestly at $1.40 yesterday or the day before. It's rebounded above $2. So it just goes to show and that's a multi-billion-dollar meme, mind you. So obviously it's the leading meme of Solana. Pretty iconic, and really we've seen, it was like Fetch had that obviously huge dip back to that SR flip of its prior all-time high. So really those coins that really exploded quite aggressively. I've seen BNB's had a pretty bad pullback too, so obviously that was probably one of the only altcoins that made an all-time high this cycle, so that's pulled back to below 600, hasn't it? It was as high as 700.
So it was almost 720, I think, was the all-time high. Now, new all-time high.
Yeah.
And I think it's back down to like the 560s.
Yeah.
So, still good. But
So essentially what's happened is we've seen Bitcoin off the back of some pretty bad FUD. So really the general gist of where it began was actually with Bitcoin being sold by the German government, who own over $2 billion in BTC. I believe it's $2 billion, maybe closer to $3 billion as a result of an illegal activity that they acquired it from, similar to the US government that holds it from Silk Road and a number of other criminal cases that got sold, and they took the Bitcoin for themselves. So really we've had these FUD pieces kind of generating, but the biggest one obviously has been Mt. Gox. Now, Mt. Gox was a cryptocurrency exchange back in 2014, which at one point handled over 70% of total Bitcoin transactions. So imagine
crazy,
that. You think about how crazy that is, that all transactions to Bitcoin were centralized 70% to one exchange. You can actually kind of begin to understand why the hack has been such a big deal kind of over the last decade. But the good or bad news for the market is that they did recover a lot of it. In 2014, the price of Bitcoin was a lot lower. So the monetary value of the Bitcoin that they're ready to distribute is around 9 to 10 billion, I believe.
Yeah, it's close to that.
And really what's happened is they've just come out and they've finally announced that they're going to be distributing it. So this week yesterday I was actually sitting there and I was doing an article on this, and I just decided that I just went on this tangent and I was just like, this isn't as bad as what it seems.
If you haven't read Mitch's article, by the way, I highly recommend it.
Yeah. What I might do instead of doing Chronicle this week is, given we're talking about this, I'll just post that in the Chronicle section. You can just go to the news. It's completely free to read on the news part anyway. But I'll just post in both areas in case you get lost. But really the general gist of the conclusion that I came to, and I've spoken to a lot of other people, is that Bitcoin's long-term future remains very bright regardless of this kind of short-term FUD and short-term noise. And you see the market get in a state of panic all the time from things like this, don't you?
It astounds me, just from my take on it. When you look at it over the past 2 years and you talk about people going, oh my God, Bitcoin's at, 18,000, this is the end. Yeah. You know what I mean?
Well, isn't the easiest example that Bitcoin was priced at 17,000. Yep. We had the worst black swan capitulation event in its history in FTX, and it only got to 15K, and 12 months later it was at 48K and had ETFs approving for it. So
well, and that's the thing. I think everyone needs to be a little bit more of a goldfish. Yeah. Because they seem to, Mt. Gox, dumping its Bitcoin, German government, talk of the US government doing the same. I think all of those supplies, if you add them up, equates to, I think it was maybe 1%.
Yeah. Yeah, exactly. And it's people don't understand the depth of the Bitcoin book. And so the easiest way to explain this to someone that doesn't understand is let's just say $2 billion, and you think of the German government, $2 billion, that's so much. Like, that'll dump Bitcoin from 65,000 to 50. Just that week prior, you had Michael Saylor buy close to $1 billion in Bitcoin, and we went from 70,000 to 65,000. Yeah. So the complete opposite happened. That's how big the volume is. If you go to the daily volume of Bitcoin, it's 20, like in the tens of the hundreds of billions. So the depth of the book and the ability to like sell might cause a short-term candle order or whatever, but it's completely kind of pertains to what's actually happening in the market at that time.
It's actually like a really cool thing though, because it's quite funny because like I actually had literally a friend ask me on the weekend being like, it sort of looks like it's topped out.
Yeah.
And you just go, what planet are you from? Like, where have you been for the last 5 odd years saying that Bitcoin's topped out now at this stage of the market with everything that's going on? You're talking about a less than 1% drop in the bucket.
Yeah. And well, I've actually got it here. So the Mt. Gox funds, so it accounts for 141,000 Bitcoin, which is a lot of Bitcoin. Of the 21 million, that accounts for 0.675%. So not even 1%, a little over 0.5% of the supply. And that is you assuming that the entire supply of that gets sold.
Yeah.
And so the actual amount sold is actually likely to be a lot less. So I'm going to reference a few points here. So why? Creditors for Mt. Gox, given this happened in 2014, like the FTX, had a decade to sell their claims. So if you were like an FTX person and say you lost, $1 million worth of Bitcoin, you could have sold your claim to someone for 10%, 20% on the dollar and gotten 200 grand from that person, and then they got your claim. So the inherent risk for them was, they might not have ever gotten anything. But
is there any numbers on how many did that?
There were numbers. I can't remember them off the top of my head though. But with Mt. Gox, it's been a lot longer. And so these were sold at various levels of 40%, 50%, 60% of their value. So that's one thing to account for. The other is, you can be buying low bullish and staying this, but a lot of them I feel would be Bitcoin maxis. And obviously maybe back then they were pretty down and out. Maybe they have a more thorough understanding of what's ahead though and where they are in the cycle.
If someone told you that you were getting 1,000 Bitcoin tomorrow that you invested in 2014 and it's obviously done a 60,000% return or whatever it is, as if you're selling it. You'd be like, well, I haven't needed it per se.
No. And you wouldn't sell all of it. Yeah. That's the clear point, is you wouldn't sell all of it. Some people will, but I assume majority won't. But using Alex Thorne and Galaxy's digital head of research, they actually estimated that of the 141,000, estimates that about 65,000 will be released onto the market. This is just their opinion, by the way. So that's less than 50% already. So that could also, that initially eases a lot of the pain if it's, less than 50%. So, yeah, it seems like the kind of overall reaction so far, given that people front ran the news, because the news is they're getting the Bitcoin in July. So none of it's been sold yet. No. The kind of selling you're seeing is the panic in the market.
This is just the Jeters.
Yeah, it's just literally the Jeters. So, you can somewhat say that it's been priced in or it's front run at least the actual selling of it, because those that wanted to be out before it got sold are out.
That's fair.
So there's not going to be that kind of cascade effect of that. But yeah, I just doubt that there's just going to be this steep sell off from when it happens, because I think we've kind of had the flush.
I think, I think we've had the either that or the flush before the little flush. So
and that was my next point. Yeah. And people like to attach after the fact narratives to price action. I reckon personally, like if we do get a sell off in the next couple of months, I just don't think it'll be Mt. Gox related. I think it'll be market related, CPI, PPI, macro related, which we'll dive on to a bit in a bit as to why I'm actually bullish on the back of this news. But yeah. I think it's probably done. There's at least the sharp sell-off. Like you have to consider that a lot of people would have actually front-ran this news before the news came out as well, whales and whatnot. And actually now looking back probably might explain a bit why we did start selling off so hard from 70,000, why the support levels under that didn't really hold that well. But I've actually got the stats here for the creditors for Mt. Gox, and roughly 75% of them opted for an early payout. So they accepted a 10% reduction. So that initially released actually about probably 95,000 into circulation. So if you put 20,000 that have been set aside for claim funds and about 10,000 that were allocated to Bitcoinica, that leaves about that 65,000 mark. So it's way less than 50% is even on the potential to hit the market. So in any case, we won't keep talking about Mt. Gox. I wanted to talk about why on the other side, because I feel like, as we've mentioned, that the bearish narratives, they take a hold of the headlines, don't they? So it's like Mt. Gox and the government selling BTCs the craze right now, but everything else gets forgotten, doesn't it? It gets forgotten that we're about 67 days after the halving, which periodically and historically, once me and Taylor have been talking about on the podcast, 60 to 90 days, have produced some of the greatest returns in financial history post-halving.
This lines up really well. When you actually look at it from a technical perspective and go, all right, as much as the narratives are pointing in one direction, the 90-day rule really is starting to look good.
Yeah, it is. I think, if I'm to be sound and, non-financial advice, and someone was to come to me right now I would tell them that I personally think that a really good time to start is August. Not that you may miss the bottom or the local bottom or the low, but I feel like just by August there's going to be a lot of messiness from here to July. There might be, like you said, one more flush. There might not be, but I feel like by August that's when we'll know where we are, and by that I mean we've either probably flushed down and invalidated the bull thesis by then. You've got a pretty good idea that maybe things aren't as beautiful as what they were going to be, or by then you then have a serious thorough understanding that, hey, we made it past the FUD, we made it past the bad parts, the US elections are in 3 months. Wow, they've decided that they'll cut rates in December. Holy shit, the ETFs now have 70 billion under management as opposed to 50 billion.
I just feel like there's such an opportunity, even like someone new to the market or existing in the market. Like personally, I've actually somewhat done a similar approach to you, but I did a similar approach to what we did in 2020.
Yeah.
And I'm positioning it to similar to what we were at 25K.
Yeah.
And it was on the downward slope. It was like May. Yeah, roughly end of May, I think it was, when we went from 40 to 20 odd and then down to the 17, 18.
Yeah.
I remember we had a similar style thing going, we're not really sure where the bottom is, but it's a great time to start looking at it. And so the idea for me was to obviously let's put orders.
Yeah.
Right. And we were going around the office doing the same thing. And we're like, we'll do 20, 18, 19, 17, 15. And I remember doing a 15.5 and it was the best buy I've ever had in my life. But now it's the same positioning, right? So setting yourself up. So like personally, I've put orders in at 58.5, 52.5, and then 47 and 48.
Yeah. And do the same with altcoins in particular, because BTC is the one you'll get cheaper, no doubt, or you may get cheaper, but alts, like I just spoke about WIF going from $4 to $1. The thing about this market psychologically, and Taylor does it, I do it, is I'll look at an investment, whatever it is, let's use WIF. And when it's $4, I'll go, can't believe I didn't buy that at $2.50. I was looking at it for so long. Now I've missed it. Don't worry. Price comes down to $140 and you refuse to buy it because of the sentiment. Nothing has changed about the project, the utility, the community. All that has changed is your psychology around viewing the market as a whole. You thought it was a great investment at $4. You don't at $1.40. It doesn't make too much sense, apart from the fact that maybe things have changed due to a black swan or something that's different. I just typed out, as you saw, to Peter, a new member of our trading academy, and we've actually got a few new members that are joining us. It's a great time to join because you're joining at a time where most are giving up, most are getting sidelined. Alts have pulled back anywhere between 50 to 80%. And I guarantee you there are a group of investors right now that were there at the end of 2023 when Bitcoin was $25,000, alts were Sol was $20, whatever it was. And they said, I'm going to invest. And then in 3 months, we went from 25K to 48K. ETFs were approved. Sol was above 100. Plenty of other coins were up. And they thought to themselves, damn it, I missed it. And then now that this has happened now, they're refusing to invest.
It's really interesting when you look at it as well. Another indicator that really sort of made me go, okay, this is a good time to start putting orders in, was that we were literally... It was this time last week, or just before we had the drop from the mid-60s or whatever it was. Fear and greed index was still at like 50, 60, and we flushed all the way down to like 25.
Yeah.
And I was like, bang, that is it. That is when you know everyone is
speaking about that specific point in time, that October, that was the last time that the daily RSI was oversold. So below that line, the very last time we had RSI this oversold on the daily was 25k, that exact time that we're discussing. So pretty interesting line up there. It felt pretty similar, didn't it, the sentiment? And now we're not saying price is automatically going to reverse from here just because of that one indicator, but once you begin to align the confluences, you probably begin to ease your emotions and your psychology around the market over the coming months, understanding that using this time to accumulate further or to actually get yourself, heavily involved, a bit more involved in the market and exposed will probably be a good thing over the longer term because, like I was explaining to Peter, he has 0 cryptocurrencies now. There is an upside and downside to investing now. The upside is that we may giga pump from here and he makes profits. The downside is that the things he may initially invest in may lose a bit of their value, but then he has the ability that he only put his initials entries in, that he can dollar cost average, get a lower average buy for his assets that he wants to invest into. And in the long run, this creates a greater return, doesn't it? And really you should be using these times right now to invest in those kind of high conviction bets.
Well, and that's kind of the thing. I think a lot of people, like when I talk to people that have never, invested in crypto or are skeptical of it being where we are in the cycle, you go, well, that's the beauty of where we are now, and that's why, obviously the Trading Academy is huge about obviously education and thought out and thorough process when it comes to investing. Yeah. That's the difference. Otherwise you just, excuse the French, but you're throwing shit against the wall and seeing what sticks, right? Yeah. So it's just about trying to obviously have a sound strategy behind that. Yeah. Which comes with education.
Yeah, of course. So, speaking on those indicators and things that I look to personally, and as I said, Taylor and I are human. We have human emotions and psychology, and although we're probably involved in the market and the day-to-day of it more than most people, like I still sometimes question and get a bit down, and I think it's probably what happened with me yesterday. I was reading the Mt. Gox off, and it's almost like I needed to convince myself once again that everything's okay.
Well, it's when you hear enough narrative, it starts to overtake you.
Yeah, exactly. So I just decided, I'm going to flesh this all out and actually see where it stands from this point of view, not with my head up the arse of Mt. Gox. Sorry, that was a weird reference. But so in doing that, as I mentioned, RSI was one. If you actually look back to the 4 times the Mt. Gox FUD was introduced, this time is slightly different because they're actually selling. But the other times that the FUD was introduced, there was almost every time a sharp correction. So say a negative 10% drawdown in Bitcoin, and within months we had rallied very hard. It almost marked a local bottom each time. Now, once again, not saying that the recent news has marked a local bottom, but in various Elliott wave counts and different trading ideas, it looks like it could have. That includes RSI bottoming out in confluence with a number of other things. But, you can kind of look to many things, and I'll post all of these charts in the Chronicle so you can see them yourselves. The first one is just looking at it from a cycle point of view. So you literally got the green box, red box, blue box, and it kind of just shows the 3 stages of each cycle. Now, we've gone pretty much through the green, red, and blue from the prior cycle, and now we're entering into the bull cycle right now. And really, if you go off historically, the trends that you'll see on the charts, we pumped 9,500% in the first bull market, then it was 4,000%. Last bull market was 650% roughly, I think, from what the low was in that bear market, whatever it was, up to 69,000. If you did use kind of diminishing returns and the same decay that we get on those returns, it does put, we spoke about this a couple of podcasts ago, actually, when we were talking about alts and where we were in the cycle, but it puts the top of what Bitcoin at about $150,000 in October of 25. Now, obviously, we've got ETFs. We've made ASP before the halving. I suggest personally, this is just my personal opinion, and this is the best part about it, is time will tell, is that this cycle will be different in terms of timings of tops and bottoms and whatnot, purely just because of ETFs. That changes everything. It changes demand. It changes supply. Well, doesn't change the supply of Bitcoin, but the supply available. And given institutions now involved, every prior cycle was just retail only, and it was just marginal buyers coming in, buying up the bags. I
also think it's an interesting one that I looked at was that supply topic, particularly when you look at it from a mining perspective as well. And you look at the demand on Bitcoin has never been higher. As much as hash rate has never been higher, the production of Bitcoin has never been slower.
Right.
So it's really interesting. That supply shock, I think, will be a massive thing come bull run, because it's just going to be an absolute.
And most people haven't experienced that supply shock ever, have they? That's
particularly not on this level.
And not on this level of both a demand and supply shock coming together at once, which is important to note. But as I said, when you kind of get this broader view of where we are right now and you're not sucked into the sentiment, I'll show this chart, but from the 2016 halving, so as we mentioned, the halving was 60-odd days ago, 70-odd days ago. Yep. It took 270 days from that halving to reach the prior cycle all-time high. From the 2020 halving, it then took 220 days to reach the prior all-time high of 2017. It's that 20K mark.
Yep.
We were actually able to breach our all-time high 42 days prior to this halving. So if you're sitting there and you're going, and I assume this is because majority of people are in alts. If you are 100% allocated to Bitcoin, you probably haven't felt a thing recently because the worst you've experienced is 10%.
Yeah.
Sorry, what was I going to say? Oh, sorry. So it's better to just understand relative to other cycles where we are, you're in a great position because people feel like there's that general sentiment that things have moved slower. They've moved much faster. We are 300 days ahead of schedule.
It's really funny. Everyone always talks to me like mining clients. Well, the halving's gone through and like nothing's happened. And it's like, well, yeah, but look at where we were prior halving.
Yeah.
Like I remember literally, I've got a client that I speak to quite regularly. And it was funny. We were talking, he called me up like 2 or 3 days ago and he's like, yeah, it's been a bit boring lately. And I was like, I know. And he's like, the halving's gone through. It should have gone up to 200K by now. Like what's going on? And I was like, oh yeah, no worries. Sure.
Should probably go look at the prior halvings.
Think back to where we were 6 months ago and we're like, we think it's probably going to go through the halving and we'll be about 30K.
Yeah.
So yeah.
Yeah.
It's just the expectations are absurd.
Oh, yeah. Absurd, yeah. And I do touch on that sentiment in this article, why, and it is because of the ETFs, and it's because we made ATS before the halving that everyone's sentiment has shifted because, as I said, if there were no ATS before the halving, no ETFs, no nothing, and we'd grinded up to 60,000 by now, everyone would be freaking out about how bullish this is. It's just the fact we made it, and we've slowly come back down. So
we're actually in a loading phase. Imagine you just turn your computer on and it's got the little bar and it's just going it's about to go.
I like those loading ones. They're good on Twitter. But speaking on indicators, so further indicators we can use as confluence to at least not say the bottom is in, but to understand that the top is not in. I think that's more important to know. Yeah. It's not about trying to pick and time the bottoms, which we don't teach to do at Imperial Wealth. We dollar cost average in all of our investments.
To pick the bottom.
Yeah, and no one can pick the bottom. You'll have traders that LARP and say, no, they didn't pick anything. No one can pick the bottom. No one can pick the tops. They're very hard. They're very ambiguous. But one indicator to me that might be signaling that the local bottom is in or is close to being in is the hash ribbons indicator that we spoke on. I won't go into detail of what this is. You can see it in the chronicle that I'll post, but really it's to do with the 30-day SMA and 60-day SMA. But that really what it is it's an indicator derived from the hash rate, which is obviously, as we all know, a key performance measurement of Bitcoin's network, really, and miners. So it reflects pretty much the total computational power of the network being produced by all miners at any given time, for those that don't know. And really what this indicator has been historically is incredibly accurate at picking bottoms, because what it essentially, the gist is that it outlines when miners have capitulated at a point in which a lot of them have to switch off and they capitulate because they're not profitable. And usually when that happens, the market has giga returns from that point. So really the explanation here is that we've had the halving. There's older probably generations that are switching off now.
Yeah, particularly like when you look at it from, a 4-year plan, it's pretty synonymous. You buy a machine for you to, any time from sort of 2 years backwards. If you bought at the wrong time, which is obviously at the end of 21, and you've paid a lot for a machine, it's gonna hurt now because it's returning a lot less.
Yeah,
and so particularly, I would say the people that are ill prepared is probably the best way to describe it. And it's a lot of people do get into this industry and think that you can just use every bit of Bitcoin to pay a power bill and then just keep your profits. Those days are kind of done.
Right.
That's a really hard thing. That's a bull cycle mentality.
Yeah.
In a bear market or in a halving, that's just not possible. So a lot of people struggling, and particularly the last few months, you would have seen a lot of people going, I can take straight after the halving, I can take the $1 to $2 a day loss. Whereas now, obviously, transaction fees have gone down due to obviously this capitulation.
Runes has slowed down.
Ordinals, yeah, exactly right. Everything's slowed down a bit, just with the stage of the market we're at. And so rewards have tapered right off. And so people are now losing $5 a day. And so you go, all right, no, that's it, I'm done.
Yeah.
So yeah, it's really funny. I was talking about it with Cal actually, because I was trying to get a bit more of a gist from sort of our facility's perspective versus what other people are doing. Because like not many of our clients are turning off, because I guess we've been a little bit more productive with upgrades and trying to help people to be ahead of that curve.
Yeah.
But particularly you bought a 70 terahash miner 3 years ago, you're feeling it. And so, yeah, it's quite interesting. But the hash rate, is down. But the other day it was below 500 exahash.
Wow.
Which was the first time since January.
And it was just so funny. Like, in last year, I remember, obviously, given I write news articles, I would be researching throughout the day. And it was almost like every day we're setting a new hash rate record, wasn't it?
Yeah. Well, and that's the thing. So when you look at it, like, particularly if you look back over, like, say, a 12-month period, the hash rate's almost doubled.
Yeah.
Right? And that's more or less because, obviously, new machines have come out, as well as obviously existing people that are on it, particularly when you got, things like Riot, Marathon, all those guys adding machines out the wazoo because they're getting investments from, big companies. The retailers are the ones who are struggling now, and so they haven't touched anything. They continue to mine, but now it's just that point of realization that you've got to either change your strategy, turn them off, or upgrade. And so it's just that. It was always something I always talked about to clients. I was like, there's going to be a capitulation after the halving because everyone's going to struggle. Yeah,
well, I can literally count, well, I can't count on two hands. So the amount of times, that we were very specific in last year when prices were cheap and miners were cheap in telling you that this was the time to buy them, not at the top of the market, like people did in 2021 and whatnot. And now it's a similar thing here, right? You're going to get miner capitulation soon. Price may come a lot lower. And in that case, you should be then allocating, not in 6 months' time when Donald Trump is saying that every miner has to be in America and the price of miners goes up to X price, and you go, shit, this is a great idea. I probably should have 6 months ago, and Mitch and Taylor were mentioning it. So something to keep in mind. Another metric that I love to use, which actually a lot of clients provide a feedback on, weirdly, I think you even did, was the MVRV Z-score.
Yeah, that's cool.
Yeah, so essentially this metric is used to evaluate whether Bitcoin is overvalued or undervalued, but by producing its fair value. But really what it does is it shows you cyclically in the past cycles when it is perfectly topped. So when it has been overvalued, that has been when the market has topped and then Bitcoin is sold off. So typically this value is considered, the market's topped or overvalued when the values above 6, and historically, as I said, this has coincided with market peaks. So at the moment, the value is 2. We're not even a third. Well, we're just about a third of the way there per the Z-score chart. And I'll show this visually for you. You can read it in the article or in the Chronicle. But yeah, as you can note in that, accurately given it's depicted in prior cycles, this to me suggests that the top is not in. Might not be that the bottom is in, but that the top, the bottom is 100% in to me, but the top is not yet in. So
the good way to look at that as well, I feel another chart when I lined the two up looked really good, was that global liquidity.
Yeah.
That was really cool because you could see it in conjunction, and time-wise, it lines up perfectly.
Yeah. So, well, I'll move on to that now. So if you're not a cycle person or you hate Bitcoin charts or because I know people and I speak to people and they invest purely in Bitcoin on a macro scale. They don't look at the Bitcoin chart. They don't look at indicators like RSI. They literally just, they understand wider macro, wider liquidity, rate cuts, governments, fiscal policy, monetary policy, and they know when to invest and risk on assets. And so I'll show you a number of charts in the Chronicle or on the news article, but the correlation between Bitcoin and global M2 is crazy. So really, M2 is a measure of the money supply that includes cash, checking deposits, and easily convertible new money. And really, this correlation can't be denied, can it? Can't be denied. So yeah, I'll show another photo of the global liquidity cycle, which is currently occurring. And you can really see this correlation even further when I show you the Bitcoin halvings and how these align with liquidity cycle uptrends. It's honestly crazy. Like, I made a joke, I remember a year ago when I first was really getting into liquidity cycles and understanding them far, far more. I would often joke that Satoshi Nakamoto was the greatest macroeconomist to ever exist, because the way he's lined this up with how
literally the lineup
cycles,
is unreal.
Liquidity work. It's almost like every time the halving's there, then there's rate cuts, there's money in the system, and like just the way it works is crazy. And you'll see these charts that show this so far in the infancy how accurate it's been.
We need to bring out our tin hats for this. We need to bring out the tin hats for this.
Oh, yeah.
Like, it's absurd how close it is.
And really, so this increase in global money, the easiest way to kind of perceive it is that when global liquidity increases, risk assets like Bitcoin become attractive. And so usually when there's a global liquidity flooding the systems, this is when governments are printing.
Yeah.
And so really you're probably sitting there and, why will global liquidity increase? Well, the cycles, but more specifically, it's my expectations that central banks around the world, we saw European central bank cut rates recently, didn't they?
Yeah.
America hasn't yet. But essentially what's happened is we've done this rally in the stock markets and in Bitcoin with the highest interest rates that they've been for decades. So obviously in the US right now, they're yet to cut rates. This is probably going to be based on a lot of macroeconomic data, such as PPI and CPI, like I've mentioned, but they're expected to cut in December. So that'll be 1 month after the election. If other economies are cutting rates throughout the next 6 months, you can then visualize how global liquidity will increase.
Yeah.
If you then draw the comparison of global liquidity to the Bitcoin chart, you can then derive a lot more conviction and confidence that Bitcoin should be a lot higher come year end or into 2025.
Yeah.
You then can align this with the cycles and everything else that I mentioned before, MVRZ, the Z-score and all of that. It's a tough word to say.
It is a big word.
Yeah.
To say,
But yeah, really it's based off inflation management for me, central bank policies, high public debt. This means that because they have so much debt, they literally just have to keep printing to pay off the debt. Yeah. It's just how it goes and how the traditional system is crook and why we're here in love with Bitcoin. Yeah. So yes, I do expect the expansion of global liquidity and M2 throughout 2024 and 2025, which should be a combination of a lot of those factors. Yeah. And as such, should increase Bitcoin's price. Now, as I'm going to kind of conclude, you might hate charts, you might hate indicators, you might hate macroeconomics, so you might just be a plain fundamentals person, and you just only invest off fundamentals. Now, as I mentioned before, even with these bearish overheads, Germany, governments, Mt. Gox, they're just quick to forget how bullish the fundamental outlook for Bitcoin is in 2024 and 2025. The first one is Larry Fink, BlackRock, and the institutions with ETFs that are now launching an Ethereum ETF next week, which I feel like has just been forgotten in amongst this craziness. And the funniest part to me about this is, and I'll ask you this, I'm not trying to FUD Bitcoin, but so everyone's panicking because Mt. Gox has got Bitcoin, US government's got Bitcoin, Germany's got Bitcoin. Who has Ethereum?
Do you reckon they don't have it?
Zilch. Where have they accumulated it from?
Wouldn't have a clue where.
So there is no bearish overhead right now for Ethereum. All these bearish overheads are cooking everyone for Bitcoin. The US government doesn't have Ethereum to sell. Mt. Gox has no Ethereum to distribute. Germany has no Ethereum to dump. No one has any Ethereum to dump on us. There's an ETF launching next week for spot Ethereum for BlackRock, Larry, Fidelity, whoever you want. And the market is currently shitting themselves. I just wanted to say that. But we won't get into that too much. But, it's very important to understand that with these ETFs, you can refer to gold in 2004. Gold, as multi-trillion dollar asset, went up 350% from 2004 to 2011. Then it went up from 350 to 450 in 2011 with just ridiculous increases because of the ETF. Now you can imagine it with a risk-on asset, how much money can flood to it in times of high liquidity. Once again, diversification, etc., etc. Institutions aren't enough. Me and Taylor have spoken at length of the US presidential candidates. Donald Trump and Joe Biden right now are in a fist fight over cryptocurrency and winning over the cryptocurrency voter. Yeah. It's of my personal opinion that, once again, mixing all these things together, ETFs, liquidity increasing, the potential for rate cuts, two presidential candidates that tomorrow are going to be in a debate and probably talk about cryptocurrency and Bitcoin and why it's important to vote for them because of the policies they'll do to push Bitcoin forward. Banks are adding these ETFs to the balance sheet too. I've spoken, it's just like we've defeated all the final bosses and everyone has shut themselves as we have. So, I think the two presidential candidates, particularly Trump, is extremely bullish for crypto, wider stock markets, and just the economy in general. Once again, if you're a fundamentals person, I literally don't know how you can't be bullish because, you can even go one step down. So it's not the institutions that run the world, not the governments. What about the businesses? Yeah. Well, look to MicroStrategy. We just had Michael Dell this week, the founder of Dell, one of the biggest software and internet companies in the world, to talk about how fond he was of Bitcoin. We've had Japanese companies now copy the playbook of MicroStrategy. Yeah. So what they do is their share prices increase in value because they hold Bitcoin on their balance sheet. They then raise more capital to buy Bitcoin and increase their balance sheet by selling off shares. It's essentially a money hack.
Yeah.
Somewhat. If there's going to be more companies to follow suit, you bet. Michael Saylor may go down as the greatest investor in history.
Yeah.
If all goes right over how he believes it. So, so we can then ask the question, is it really all that doom and gloom from Mt. Gox?
Yeah, when you look at it for like today, tomorrow, but after that, no.
So I think, hopefully I've said we've discussed enough here to probably make you realize that if you were sitting there and you'll go, oh, I'm so scared about this 9 billion of Bitcoin that hits the market, or the 2 billion. Just look to the indicators, look at the charts, block out all the short-term noise. If you are bearish and you need some bearish encouragement, I have placed some bearish charts here that I hope are personally invalidated that may support the argument for a little lower, but in fact, 2 of the 3 charts...
Harmonic?
Huh?
You mean your bat harmonic?
Yes.
Yeah, I literally placed orders. I was like,
the bat harmonic, well, that's a bullish bat harmonic, and what it is it's medium-term bearish where price may gravitate towards $42,000 to a key level, but the flip side of that is if that technical pattern is right, is that the impulse leg from there should have us at about 150,000. So to me, any short-term to medium-term bearishness, fine. I'm happy to accept that we can get that. Yeah. If the market does cheat, if certain data comes out, if Mt. Gox does this, whatever it may be. But my main theory and my main thesis is to ignore that, block it out, use it as accumulation, use it to dollar cost average, because come end of year, I believe Bitcoin and altcoins will be much higher prices on financial advice.
Oh, 100%. That's 100% exactly why I looked at it. I was like, that. My first instinct was, oh, come on. And then I was like, actually, I could use that.
Yeah, exactly. And I think that's the difference between sound investors in the cryptocurrency market and poor ones, is that those that make those that spend their time buying on the dips and on the blood, as opposed to buying when the market is raging and euphoric, outperform the other side. So really that should be, I'm not going to go over the bearish ideas and what though.
We don't talk about it.
No, we don't need to. Ultimately, while short-term volatility and FUD can affect the market, long-term, if you examine Bitcoin's, historical price trends, indicators, past cycles, you understand global liquidity, what's happening on a macro scale, I think you'll find that you'll maintain a lot of high conviction and confidence in Bitcoin's future.
I like it.
Alrighty, well, that'll wrap us up. I hope by next week that is green, but actually for the next week and the week after, we're going to be missing our head of sales, Taylor.
I'll be away.
Unfortunately enough, I'll be interviewing 2 different guests, so stay tuned for that. It's going to be super exciting and a bit of a change up, so guess we'll see you then. Hopefully we're green.
I'll be back for the final one before our break.
Yes, we will be having a break. We do head off to Nashville, where Donald Trump is in fact speaking or slated to speak, so
I'll get a selfie with him.
Yes. So yes, we'll be done on the 23rd of June, back August 10. I will be.
Yeah, I'll be back September.
So that'll be our break. So if you need to reach out to us before then, make sure you do.
Easy.
Cheers.
Guys.
Thanks, everyone.